Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City, and I just did a video on the general economic conditions, about the job growth, about the low unemployment that we're getting back to, and how things are looking very, very dynamic. And what I want to do right now is talk about the housing market, because that's what I do. I'm a realtor. I handle primarily investment property. Oh, well, all investment property is all I do, but I've done every aspect of investments. And I know about market cycles. When I started in 1989, I was primarily involved in foreclosures. Then I had a diverse kind of a way of doing business after that time, after 1993. Then we come up to 2006, 2007, 2008. We know the situation that happened there, and in short sales, and then back to investment real estate. So I'm used to change. But what I've seen here in the last quarter of 2020 especially is something that I have never seen in 31 years of real estate, and that whole history of what I just talked about. And that is a boom in housing, a boom in sales, where supply is incredibly low in comparison to the demand. One thing that I saw last year is competitive bidding. Now, when I started in real estate in 1989 and you did these blind offers on HUD and VA repos, it could get a little crazy, but the prices were incredibly low. What happened is you'd get a day on the market and all of a sudden there was 3, 5, and even 10 offers on those homes above the listed price, to the extent that existing homes became as expensive as new construction. And that is not right. That is not the way it's supposed to be. New construction is always higher. But in this case, I think there was some, maybe I call it irrational exuberance, but there's a lot of reasons for it in terms of why that happened. Number one, when you can get an interest rate fixed for 2% as an owner occupant, that's a little nutty. That encouraged a lot of people to buy. The pent-up demand of the lockdown, of the fact that we really couldn't do the kind of business we wanted until the city opened back up again. And that caused a flood of buyers that coming into the market. And I think the lockdown did a third thing. I think what the lockdown did is taught us a lot about what a home means to us. So it wasn't just a place to eat and sleep and watch television. It was our restaurant, it was our amusement park, it was our gym, it was our office, it was all of these things. And we thought, well, is this the way we really want to live? If you were an apartment complex, you really wanted out. And I saw apartment people buying homes for probably in numbers that I've never seen before in those 31 years or ever in the Oklahoma City market. Now, again, market cycles are a reality, and this cannot last. It won't last. Interest rates at these rates won't last forever. And also at a certain point, that supply starts increasing, which I'm seeing now. I'm seeing single-family homes come on the market in greater numbers. Now, it's still selling pretty strongly in January because of interest rates, and January is very interest rate related. It's slow if the rates are high. It's rapid if the rates are low, as they are still today. But as we go through this year, we're going to be in a very, very good situation where existing homes are going to be in a greater amount of supply. So it's a little tougher right now to find inventory. The absorption rate is on the seller side at this point. Doesn't mean we can't seek out and find something in investments for you, either new or existing. We're starting to see the inventory come back in both areas. So if you're an investor, I think I have something for you today.